All right, hey everyone, Mark here. Thanks for joining me for another GreenBridge Investing market analysis. So in this session, I'm going to talk about this potential Bitcoin peak that we're facing, all right, and the Elliott wave count, which can be very subjective in nature, can help us get a gauge of is the top near or not, okay, or help us gauge potential. Right, very important when it comes to risk management, whether it's an investment or a swing trade or something shorter time frame. Also, I want to talk about the same thing that's happening in the stock market, plus a couple of stocks and gold. Real quick, I'm going to keep that stuff real quick because I want to spend more time on your questions. So if you're new to the channel, please make sure to share your symbols now in the chat. Okay, stocks or any other market you want to see. If it's a coin, just put USD after it so I don't spend 3 hours on the wrong symbol, and I will go from there. Also, register for the channel if you haven't yet so you get an email notification every time we stream, and also press the like button if you like the work that I'm doing. Hey Jay, good to see you. So with that said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, straight to Bitcoin. Let me get my Bitcoin chart here. Where is it? There it is. All right. Now, another thing real quick. If you're new to GreenBridge, I put all the links and everything we do in the description portion of this video. So you can just click on show more at the bottom there and you'll get all the information. Okay. We have a swing trade signal service. We have a 7-day free trial. We have a chat room. So I don't have to spend 3 minutes talking about it. You can check it out there and see what you think. All right, cool. So let's get started with the chart here. I'm first looking at Bitcoin. So here, hey HS, good to see you. Okay, cool. So here's the thing. Bitcoin has been very tricky, right? Because recently it's been giving us this red price action back here. And someone in the chat room earlier today was asking about the wave 4, the minor wave 4, because, you know, and his question was, does a wave 4 always have to look like a bearish structure? Not necessarily, okay? So there can be some subjectivity there, and that's where people get turned off with Elliott wave because it can be very confusing. All right, the thing is, you can't overcomplicate it. So here's how I'm counting this wave. All right, and by the way, this move from this low right here, what is that? The January low to the current high. That is what I'm considering wave 5 of 3. Now, what does that mean, wave 5 of 3? Well, if you zoom all the way out and you go to the bottom of this move, you know, which dates back to March of the previous year, that's the bottom of a broad wave 3, okay? So wave 3 was confirmed when we took out 14K, and now, you know, we've confirmed wave 5 when we took out 40K. Now, this is the broader wave 3, right? Which means once it completes, we're expecting a broader wave 4. A wave 4 is a corrective wave, and it will be relative to this entire magnitude from the current high to the March low. That's a pretty big magnitude, all right, which means the next corrective wave can be very dramatic, okay? A lot of people are going to become bearish. All the bears are going to come out. They're going to start hating on Bitcoin. They're going to start saying it's garbage, it's a, you know, it's a scam, blah, blah, blah. You're going to hear all that nonsense again. But the key to wave 4 is finding its bottom. Okay, the broad wave 4. Also, keep in mind, the broad wave 4 can linger for months. This is not a couple of day type of thing. It doesn't mean that there won't be any buying opportunities within the broad wave 4. There will be, but we have to be very conservative with our targets. So here, let me show you how I'm counting these waves, because whenever you have a wave 5, you don't know where that wave 5 is going to peak. There's no way to know exactly where. The thing is, if you can count 5 waves, chances are the move is over, okay? Even if it extends further, I mean, this thing can push to 57K. That's where my next inflection point is. Up there, it's very possible that we can extend or possibly even higher. But the thing is, when you're in that fifth wave, that turn is coming, okay? So you have to be prepared for it. And it can come out of nowhere, right? Some stupid piece of news comes out that no one was anticipating, and next thing you know, right, that's usually how it goes. Now, so let's just show you how I'm counting these waves, right? So here, the very bottom, this section right here, let me make that nice and big so you can see it, right? So this was the minor wave 4, right? This corrective movement back here, and then we started with this initial push, okay? The initial push right here. I called a swing trade on that, by the way, which I sent out. That was, weeks and weeks ago. That was the initial push. That was wave one, right? Then we had this little pullback. That's wave two of the 5. Then we have the exaggerated trend type of move. That's typically a wave 3. Now, as far as wave 4 goes, right, on this subwave magnitude, this is what I'm looking at, right? See this little blip over here? That red candle, and then it turned into a green candle, the next candle, that section right there, that's wave 4. That's a mini wave 4, a subwave. Why am I calling that a wave 4? Because it's similar in magnitude to wave 2. Okay, so that is your wave 4, and then once it starts to go, this is your subwave 5. Okay, so 1, 2, right? This looks like a 3. So we get a little mini 4 going on over here, another little tiny 4, and then maybe one more little push higher. Okay, maybe that can take us into those mid 50,000 area, right? The mid 50,000s, possibly up to near that inflection point. But after that, I mean, I would not be very optimistic about this thing continuing once this thing completes. Again, I'm not bearish on Bitcoin, but it's just important to understand, how Elliott Wave can really help you gauge the potential. All right, Elliott Wave is a very good forecasting method. In fact, it was a required learning for the CMT. You had to be very familiar with it in order to get through all the tests that you have to take. And there's good reason for that. It basically measures sentiment in the form of price patterns. That's basically what it does, right? So each wave has a characteristic to it, and that characteristic relates to sentiment, or the feelings of the herd mentality and how it's progressing or changing. Okay, so that's what we're looking at for Bitcoin. Now, since Bitcoin is the leader, it's going to affect a lot of altcoins. So here's the thing. If you're an investor in Bitcoin, hopefully you're locking in profits along the way. Andrew's been talking about trimming and trimming and trimming. It's a wise idea. You're never going to get the top. Those of you that think, many of you, you're regulars, so you know, but anyone that's new, that's watching this video, if you think you're going to sell it all at the top, that's really no different than gambling. So a good habit to be in is when things are at highs, you take some off the table. It's just a good thing to do. You're never going to get the top. Okay, if you do, it's a lottery ticket. Now, that's one thing. So you should be reducing inventory. You should be reducing risk. As far as swing trades go, we have a couple of aggressive trades on, alternate trades that were called back in this area here, when this thing was fooling around this area. As long as we stay above 45K, this thing will probably be working its way higher, can grind higher. This current candle can turn into an inside bar at the close, right? Which would actually generate a new buy signal, right? If we get that. So that would be a reason to stay in the swing trade to see if we can reach its targets. Okay, this little pin bar, this little inside bar is not a sell signal until the low is taken out. But even then, it may not go very far. The key supports you have to look at are 45K. It's this support right here. Once that's taken out, then that's probably confirmation that the broader wave 4 may be beginning. The other thing is the major level is 34K. I have to update this chart, but the major level is 34K. If price takes that out, then that is a sign that we are in the broad wave 4. But between here and that level, this thing is just gyrating in it could be a broader corrective, pattern. It could be a broader wave 4, like relative to this one right here. It could be something like that. But we have to see. But the thing is, the confirmation comes when you take out that 34K. So that's how we'll know. Again, there'll be buying opportunities along the way, but we have to keep our profit targets very conservative in that situation, because as you know, in wave 4s, there's lots of fake outs and lots of false starts. All right. Hey, everyone. All right. Emma and HS, good to see you. Gabriel. All right. So that's my Bitcoin outlook. Let's take a quick look at some comparative altcoins. I want to start with DOT, because DOT is a swing trade weeks ago. I know some of our members took it. Let's see. I think it was on, what exchange was that on that I called it on? I'm sorry. It's USD. Hold on a second. DOT, USD. Yeah, let me go. So I believe that was on, is it this one? I have, because I want to show you with the one with the orders. The one with the orders on it. Hold on, is it Bitfinex? Yeah, there it is. Okay. So as you can see, right, this thing was called at 18.25 and target 3 is 33.50. Did it get there? 32.56 is the high. So it missed it by $1 and now we're fooling around 30. When you see these situations and you're in it, it's not a bad idea to take that third target, you know, a little early. You want to take it right now, take it off the table. Hey, it's green. That's all that matters, right? It's green. So what? You don't get the exact target. You're still in the area. You missed it by $1. Now, this thing may continue higher if Bitcoin continues higher, but if Bitcoin fails and starts to pull back, you're going to see a pullback across all of these things. So just something to keep in mind. All right. Some of the other ones like that really got hammered in the little minor. Bitcoin didn't even pull back, and these things got, you know, they gave back a decent little portion right there. They're starting to show buy signals, right? This is a buy signal here in AVAX. It's a buy signal right there. Your risk can be defined by that 34 low. Again, this is for a swing trade, but keep in mind, if there's any type of failure, this thing's gonna fail too. Okay, so something to keep in mind. Same with like Litecoin. Take a look at Litecoin. I was pointing this out earlier in the chat room today. If you buy a breakout and it looks like that, after you buy it, you get the red candle. That's not what you want to see. Okay, if this closes this way, which it looks like it's going to do, that would be a fake out, and you don't want to be caught at the top of that. So what do you do as a swing trader? You get out and take the loss, because otherwise you're exposing yourself to the risk that it pulls back dramatically into the 170s. Why expose yourself to that? All right. Also, now it's possible that it may fake out again and give you an inside bar and go higher, but it's not about, oh, I should have this, I should have that, I could have made this. It's about preventing the loss. Okay. If you have to take a small loss to prevent a big loss, that's usually a good idea. Okay. Small losses are much better than big losses. Anyone that's been around for a while will agree with me on that. Okay, so those are the coins I wanted to run through real quick. Let's take a look at the stock market, because we've had some interesting situation today. All right, so earlier in the day, and this is important to analyze, especially if you're into stocks. You know, we have a lot of stock stuff going on. So using the S&P as a gauge and using the NASDAQ as a gauge can help us with our swing trade expectations and managing risk. So right now on the CFD, as you can see here, look, we tested this low again. And what did we get? I mean, this thing's going to close in less than an hour. And what is this? It's a pin bar. Okay, so that right there is a sign of strength. They're buying up the market. They don't want the market to sell off. It never took out this support. So anyone that's getting bearish, I mean, we've been bearish for a while as far as looking for the broad pullback, and that's certainly not the kind of follow through we want to see as far as the pullback goes. Now, I have some UVXY calls which would capitalize or which would benefit from a broad pullback. And those calls are in the red right now. They're suffering because this market's not pulling back. Now, I knew that going into it. I explained how aggressive that trade was. And hey, I could lose my premium. But I only paid like $1.65 or whatever for one. And then the other one was like $1.80. So if I lose it, you know, what am I going to do? But the thing is, my loss is fixed. So if the market wants to keep grinding higher and higher and higher, I'm not sitting there hoping that it turns. I take my loss, and that's that. The thing is, I have 4 weeks for this market to pull back. I have 4 more weeks, okay? And as you can see, judging by like the way it moved back here, you know, in the beginning of February there, in one candle, this thing moved, you know, pretty big. What is this? From high to low, 38.60. 38.60 to 37.14 in one day, 150 points. Like, you know, we can do it. Okay, that's the S&P, not the NASDAQ. 150 points on the S&P is enormous. So that's, you know, all I need is a move like that, and my calls will be doing okay. So I have 4 weeks to get that kind of move. We'll see if the market delivers or not. But right now, the market is saying not. That's what this is saying. So what does that mean? Good time to be looking at your long swing trades, right? With this pin bar. Now, of course, we have to take out the pin bar high tomorrow. So let's look at a couple of stocks that I was looking at yesterday. Like for example, the electric vehicle sector, right? Look at Tesla. Nice inside bar, buy signal developing. That's what I want to see when the S&P is reversing like that. So there's a buy signal developing right there. There was another one. I believe it was another electric vehicle stock. Was it CLSK? Let me see. CLSK. Ooh, no, that one jumped ahead. Look, there was a buy signal yesterday, and wow. Okay, missed that one. Up $7 today. Yeah, great. Let me see, what else was there? There was another specific one I was looking at. Oh, NEO, that was it, NEO. So now look at NEO, perfect example. The S&P, right, gave us the pin bar. Tesla gave us a potential buy signal, and of course, you know, NEO is following along. Look at the pin bar. There it is, right? So we take out that pin bar high tomorrow, 56.31. That is a swing trade long. Nice consolidation, you know, buying a failed low off of a higher low consolidation. That's a nice high probability setup. That's what I'm looking for. Okay, so that's a possible swing trade for tomorrow. All right, so those are a couple of stocks I was looking at. I mean, there's going to be lots of stuff going on with the stocks. Let me take a look at NKLA real quick. How's that thing doing? That thing's not doing so great, but you know, it's not doing horribly either. I love these little consolidations when no one's paying attention to them, because next thing you know, you get a big green candle out of nowhere. Anyway, but there's no buy signal there. All right, so those are a couple of stocks. Now, one more I want to go over is gold. Let's take a look at gold real quick, because this is an interesting situation. I hope that you've been taking notes on gold, and then I'm going to go into the chat here. So again, if you have any questions about any specific stocks or coins or anything, just please share it in the chat now, so I can. I want to spend more time on the chat. Now, this picture on gold, please print this in your mind, okay? Make sure you have a reference of this somewhere, because this is what a broad wave 4 looks like. I bring this up like every week. This is what a broad wave 4 looks like. It's ugly, it's unpleasant, it's very hard to trade. Okay, you get a lot of false starts, a lot of false breakouts, and you better believe in the gold area, there's a lot of hype and a lot of nonsense that goes on every time this thing tries to push highs. You can't pay attention to any of that fundamental stuff. We're in a wave 4. There's really no reason for gold to be in a bearish trend, and some people would probably call this bearish because they focus just on this little section right here. But what they miss is, and I point it out all the time, what they miss is the bigger picture trend, right, which is clearly higher lows and higher highs. As you can see, we've been consolidating since August. That's a wave 4. That's a broad wave 4. That is what they look like. Bitcoin will do the same thing because it's not immune to these patterns, right? Elliott wave, that's what Elliott wave is all about. And at some point it will go into something like this. Maybe not exactly as long, maybe not as, it won't look exactly like this, but this is a good example of a compound consolidation that just goes on and can shake you out, okay, if you don't pay attention to the bigger picture. Now, as far as gold goes, I've been talking about it in the chat room. Buy the mining stocks in these situations, right? Gold is getting hammered. Gold is what, it's only minus $1.20 today, not bad, at 1775 area. This is a major support, okay? And it's hesitating. We're getting that inside bar, look at that. So great time to buy WPM, NEM, GDX, you know, the mining stocks. Now, here's the other thing, and I put this out yesterday in the chat room as well. You have to have your target allocation set for these things, meaning, let's just say you have a $10,000 portfolio, and you say, okay, out of that $10,000 portfolio, I want to only invest 5% of that into gold, right? Because there's no need to overweight in gold. You know, gold is a slightly more speculative type of asset and all that kind of stuff, right? So you say, okay, I want to allocate 5%. What's 5% of 10,000? That would be $500, okay? Because 10% would be 1,000, right? So 5% is $500. So you take that $500, and now you can maybe split that up into, you know, $250 and $250, right? Now, out of those $250 increments, you can buy 2 stocks, $250 worth of 2 stocks. I know I'm talking small numbers, but this is assuming you have a $10,000 portfolio. If you have a $100,000 portfolio or a $50,000 portfolio, you just want to, you know, just go by the percentages. Point is, there comes a point when you've allocated all of your allotments. So, for example, 250 and 250, right? So let's say you were buying a couple of shares at a time of wheat precious metals. All right, a couple of shares at a time. It's a $40 stock. So you can only buy $250 worth, right? So that's really going to allow you to own 5 shares. Okay, so let's say you've been buying 1 share a day and you've reached your $250 allotment or target. That's it, you stop. You don't keep buying. Because what if gold goes to an extreme price? What if it goes to 1650? You don't want to keep buying and buying and buying and keep getting, more and more exposure to something that may take an extreme move. You want to have your once you're in and you've averaged in, that's it. You stop. Okay. Now, if there's a very unusual and extreme situation, like let's just say gold goes to, I don't know, again, 1650, some ridiculous number, and really has no business being there, and you have some capital on the side which you've allocated just for these unique situations, then okay, you can justify maybe putting on another few $100s worth, okay, of gold at those extreme prices. But that's what that allocation is for. It's not for, hey, I just feel like buying some today. No, it's for unusual situations which only occur once or twice a year. Okay, just to give you an idea. It's not something that occurs every once in a while. Sometimes even less frequent. Okay, so anyway, just wanted to point that out real quick with gold and the whole averaging in situation. All right, so enough of all that. Let's take a look at the chart. Let's take a look at the chat and see what you guys have, what you guys want to see. Oh yeah, and by the way, I'm working on doing I'm working on a mentoring program. Okay, so what I'm going to do before I finish this session here is I'm going to share a link with you guys. It's a survey link because I'd like to know what you guys think of what a good mentoring program is. I mean, I have my ideas of what I think one is, but hey, I've been in this a long time. You guys may have a much more in tune with what is standard today and what is not. So I'm going to share a link, and if you can, please take a minute and just answer the survey. It's only like 2 questions or whatever. And just let me know what you think a good mentoring program is made up of. Okay, I'll share that link before I wrap this up. All right, anyway, so let's get into the chat here. All right, so let's take a look here. Vet, oh, here we go. Vet, HS's brother. HS's brother wants to know what's going on with Vet. All right, well, here's the thing. So, well, HS and your brother, you're in good shape here with this thing. Why? Because you have a higher low. Okay, so it tried pulling back. You have a nice little higher low developing here. Where there's a higher low, often it is followed by a higher high. So at this moment, especially with this nice strong candle here, and with Bitcoin not really selling off, you're in a good situation where another leg higher is within reason. Okay, but if it starts pushing, okay, it starts pushing, what is that? Basically the 6.5 cent area. It would be a good idea to reduce. He sold it all? Don't tell me he sold it all, HS. I hope he didn't sell it all, because I was going to say, you just want to trim. This would be a good opportunity to trim. When it starts pushing highs, you trim. But hey, if he sold it all, it's still a good profit. Okay, nothing wrong with, a profit's a profit. But if he still has some, this would be a good place to trim. As far as if you don't have any, I'm not a big fan of swing trading these things. I mean, the chart looks good now, but the problem is, Bitcoin is the leader here, and these things, 1 minute they look good, and then they just turn like in an instant. So, he sold it all. All right, look, no big deal. It wasn't like he missed out on anything. He had a nice profit, but it does look like it's going to go for another leg higher. Again, this is consistent with Bitcoin. So if Bitcoin fails, right, and it hasn't failed yet, but if it fails, then you know what this thing will do? It'll pull like a Litecoin move, and that's what you have to be careful of, right? What I mean by a Litecoin move is this fake out situation. This is what you don't want to get caught in, where it tries to break out, and then the next candle turns red like that. That's what you don't want to be caught in, and VET can do that. That's why I'm not a big fan. That's why I won't call this as a swing trade at this level like this. If this was a stock, I would be more interested, because stocks can be motivated on their own. These things I'm a lot more, I'm not as optimistic about, because they tend to follow the leader. Not all the time, but there's a tendency. So that's what I'd say about that. But it is poised to go higher at this moment. I would give you that. Okay. Okay, so let's see here. What else we got? SPWR and SNDE. Okay, SPWR. Ooh, all right. These sun power things will be getting a little hammered. I like this. I like it because you're pulling back. Now, you have a nice bullish structure here, okay? Going back, nice bullish structure. That's the structure that's in play. Now you have this corrective situation, and this is nice. You have a nice three-leg correction. There's no reason to buy it at the moment, okay, because that's a solid red candle, but you're in a great location relative to this low, which is 38 and a quarter. What you want to see on this thing, for one, is you want to see this thing stabilize. If it can produce a inside bar in the next day or maybe early next week, you get like an inside bar or something, or maybe you get like a little pop-up and then another test of that low, right? And you get like a little double bottom situation. You get something like that over here. That would be ideal for taking this thing as a long, as a swing trade long. Definitely a good one to keep an eye on because the potential is nice on these things. If it reverses here, right? Because remember this, and by the way, this is an extreme wave 4 because usually these very strong trending type of waves, that's typically a wave 3. And this is followed by a pretty sharp correction here. This is typically what a wave 4, this is one version of a wave 4, I should say. It's almost like a standard wave 4, which, you know, it's not a consolidation exactly. It looks more like it's a three-leg pattern, and it's not a compound pattern. And if this thing bottoms, you know, you may get at least a test of this previous high here, which is 51.70. So there's plenty of potential in here. Okay, I like this, just not right now. Like I wouldn't buy this right now. There's no reason to buy it at the moment, but you do have a good location and the trend is still in your favor. Okay, this would be especially so if the stock market can, you know, get its run going again, even for one more leg higher. All right, so that's that one. Now you had another one, SNDE, which I believe is Sundance Energy. I sent that one out actually as a swing trade recently as well. And look, it started to do okay, and look, gave it back. Oh, these things are such a pain. Look, do I have the chart? Do I have the, there, look, there's the order right there. So I sent this order out, and look, the buy stop was 315. Where are we right now? 263. So this thing is today's low. Today's low is 263. It hasn't stopped out yet. Stop loss is 255, but it looks like it's going to stop out. So what are you going to do? Okay, in these situations, like I don't react. If I set the stop and it goes to the stop, that's it. That's the risk that I assumed, the risk that I accepted at the time of the trade, and that's that, right? The market makes a determination because there'll be many times when it looks like garbage, but then it turns out to be a big winner. We saw that with like Jumia, we saw that with a bunch of other ones. So you just have to let it do its job, right? So if it stops you out, stops save money. They're actually a good thing. I can't tell you, we had FUV was trade of the week that I called, like the week before, and it got stopped out. That thing was like $5 lower than the stop. So, you know, stops save money. All right, so in this situation, as far as Sundance Energy, it looks very similar to the other one you just brought up there, the SPWR. You know, nice location, no supportive price action. There's no setup. So again, if this thing can give a similar setup in this location, this is still a candidate for a long. I mean, I would still be interested in a long if this consolidation or if this range that it's developing right now, if this can hold. Okay, this would just be a nice consolidation after the initial push, and maybe it'll go for another leg higher. I like this one too because it's cheap. You know, it's a very cheap stock. So you can do a lot with that. And I'm not sure, there may be options on that one as well. I have to look. But okay, thank you for bringing that one up. Hey, Gabriel. Okay, Jay, APPH. All right, let's see. APPH. Ooh, not much price history on this one. So let's see. So there's really, at this moment, right, there's no trend. All you have is a consolidation, right? This whole thing is a consolidation because you have a low, you have a high, and it's right sort of in the middle of the range. So it's tough to say what to do on something like this. You have a couple of things going for you if you bought it. I mean, you have this bullish pin bar, right, which obviously took out today, took out that high yesterday, so I could see why you would get into that. Now it's closing as a bearish pin bar, but that doesn't really mean anything at such a location because you're in the middle of a range. You're not at the high of the range. If this was the high, I would say, yeah, that's not good. But I mean, this may go lower if you take out that pin bar low. But right now at this point, since there's very little price history, you're going to have to use this as your reference point, which is 28, basically 29, the high 28s, that 29 area. That's going to have to be where you define risk from at this point, because you don't really have much to work with. So that's what I do. Otherwise, I'm neutral on this because there's no trend. I mean, you know, with these, looks like obviously there's not much price history. If it IPO'd recently, you know how these things, they start out one way and next thing you know, they give back, you know, 50% and then they turn around and have a nice run. So this, at this point, anything is possible, right? So that's how I would define risk on that thing and hope for the best. That's all you can do, okay? And let the market figure out what it wants to do. Okay, cool. Thank you for bringing that one up. Definitely a good one for the radar. Hey, Andrew. Okay, Dimitri. Okay, could you please comment on CROUSD? Does it look as a wave 5 on the weekly? Where would you expect the wave to go? All right, let's see. Let's see what that is. Okay. Well, I like, let's pull up a weekly chart. Let me zoom out a bit here. And let's see. So this is a weekly chart of this thing. And you're asking here, does it look as a wave 5? No, that's not a wave 5. Definitely not. So the initial wave, you know, you have from this March low over here, that looks like, I mean, if this is all the price history we have, then I'm going to have to say that this initial push barely, okay, this barely goes lower than this. What's the low here? 2.5 cents. And what's the low here? 2.32. Is this a little bit lower? See, the thing, I mean, it doesn't have to be exact. I'm looking at these lows. This thing is just about the same, maybe a tad lower. This is your wave 1 right here, right? This initial push. This is your wave 2 pullback. And then your wave 3 is this broad trend, right? Now, wave 4 is not supposed to overlap with wave 1. If it overlaps, then it's not a wave 4, okay? Which means you don't have an impulse wave here. So what this is telling me is all your waves were pretty much done inside of here, right? 1, 2, then there's a I guess it's hard to see it, but there must be a 4 in there, 5 in somewhere, because this pullback ruined the whole impulse, right? It went against the rules of an impulse. So at this point, I would say that this thing is in a broad range, okay? Because it's not really trending in the bigger picture. Now, if you shrink it and you just focus just on this section here, you have a 1 and a 2 and a 3. All right, 1 and 2 and 3 of what? I don't know. When you're in a broad consolidation like this, you can get a lot of 3-leg waves. You can get like a compound consolidation until it breaks out and starts defining itself, defining a new trend. It's possible that this may be beginning to do that, but at this point, it's tough to say. There's really not much here. Okay, so that's where the wave count can become confusing. So I would say, if anything, let this thing play out. This is not a wave 5. This is, if anything, this is a 1, 2, and 3. And if this is going to be an impulse, you should get a little 4 pullback that should not overlap this little section here. And then you should get another leg higher that can test at least this high. Okay, but like I said, that type of structure is not common if this is going to be a broad consolidation. So you have to see. Okay, so in these situations where the Elliott waves don't make sense, because they don't really make a whole lot of sense here, instead of fighting it and trying to force a wave count on it, you don't. You just say, okay, you know what? I can't really see waves clearly, so I'm just going to look at support and resistance levels. And that's it. Okay, so you can look at support and resistance, and that will be your guide. Okay, Elliott wave is best used when the waves are clear. And a lot of people, when the waves are not clear, they still try to force those wave counts. And it can be very confusing and throw you off. So at this point, I'd say you're in the middle of the range. Wait for a pullback, if anything, if you're interested in buying it. If you're in it, there's nothing to do here. If you're in it, just let this thing do its job and let it go higher. I mean, in the shorter time frame, look, higher low, higher high, let it do its thing, and see where the next sell signal shows up. So thanks for bringing that one up. I hope they found that helpful. Andrew, PLTRNONVO. Let's take a look. PLTR. Okay, this one got beat up a little bit. See, now here's what I mean by like a nice wave structure. Okay, in this situation here, right, this could be like a 1, right? The consolidation here, a 2. Now this 3 failed, right? This is not what a 3 looks like. 3 should, continue. 3 should look something like this, right? That's what 3 should look like. So what you have now here is just another consolidation situation. You have a double top here. You're back inside this consolidation range. So Elliott wave is not going to help us right now. Not on this one, because the wave count is broken. Right? The impulse wave is the rules are not met. So all you can do now is really go by general trend and support and resistance. You have support coming up here around 24 and a half. You have this candle that's out in the middle of nowhere, right? And it's trying to find some stabilization, but there's nothing there yet. I wouldn't go on that single candle, especially since you have a lower high here. What you want to see is price find stability around that 25 area. Okay, stability meaning something like this range back here. You want to see something similar, even if it's only like, 5 candles. You want to see something develop more than 1 candle before doing anything with it. So you do have an attractive location, but that's all you have. Okay, so I wouldn't do anything with that right now. So thank you for bringing that one up. The other one was ONVO. Let's take a look. Okay, it's nice pull. These are nice pullbacks across the board here, right? With the market getting hammered slightly. So again, in this situation, you're back inside this consolidation range here. Let's define the range. I mean, the general looks like you have generally higher lows and higher highs, right? This is your current range that you're dealing with. Can I get a horizontal line? Okay. So you're dealing with this type of range right now. That's your general range. You're sort of in the middle of it. So nothing to do here, right? You don't have any type of reversal going on, just a large red candle, which means momentum is still bearish for the moment, and you're in the middle of the range. You're not at the best location. The best location, or most attractive, would be somewhere around here, which is basically almost $12, right? So this thing closed at $14.56. You might as well wait this one out as well. Nothing to do here. I would leave this alone until you get some sort of stabilization or a test of a clear support instead of mid-range. Mid-range, it's like 50-50. Anything can happen. All right, so that's that one. It's hard to define risk there as well. Hey, Tarkus, good to see you. Zalmoxis. Okay, Algo. Let's take a look at Algo USD. Okay, interesting. So this one looks similar to like some of those other ones we looked at, like VET. Nice. This is a nice impulse structure. I mean, look at this. That's pretty clear. Okay, this is what a nice clear impulse structure looks like. Wave 1 was back there. Wave 2 consolidation, very elongated. Wave 3, right? Beautiful. Okay, wave 4 now. This is wave 4. So in this wave 4, you have your first attempt higher. Okay, this first leg. You do have a buy signal, right? Took out the pin bar, yesterday's pin bar of $1.42. Took that out. Today's high is $1.45. So you do have a buy signal in place. The thing that you have to keep in mind is, if these other currencies start fooling around, right, Bitcoin starts to hesitate, this thing is in position to fake out. Like I was saying, wave 4s, they're usually not very simple, where it just pulls back and next thing you know, it does that. Sometimes that can happen, but often what you get with these are false starts, right? It pops up a bit and then you get in and then it pulls back. So in these situations, what I would wait for in this, if you're not in it, I'd wait, as for a swing trade anyway, I'd wait for a test of the low, some kind of double bottom, some form of stability, and some sort of setup and confirmation at such a level. Okay, that's one thing. If you take this now, you're going to have to put your stop, below 120. Your stop's probably going to have to go like around $1, give it some room, in case this thing fools around. So that's what I would do with this, instead of, taking it here is, again, it's like a 50-50 type of thing. If Bitcoin goes your way, I'd be expecting, a test of high. This thing has a lot of potential to fail too, because, again, you run into these highs. That's where a lot of people often get caught, especially if the party is starting to run out of steam. You have to be careful with these. So if you want to be aggressive, okay, you can go for this buy signal now and consider a stop. Like I said, if you want to be more conservative, then you may miss a move, but I'd rather miss a move and lose nothing than keep taking trades that are lower probability and keep taking losses, right? A lot of people, they just want to be in a trade because they just want that hope to make money. But the thing is, if you take 10 stops in a row, what good is being in a trade, right? I'd rather have a high probability trade. I'd rather take 2 or 3 trades with a very high chance of it going my way rather than a random chance. Sometimes randomness pays off, but it's not a good way to make money, okay, over time. People just want that quick fix, but they don't see the bigger picture. Okay, so that's what I'd say about that one. Thanks for bringing it up. Okay. Oh, yeah, no, HS, I know. Yeah, right. I know he made a ton of money, so he definitely shouldn't feel bad if the thing goes higher. Okay. Tarkus, do you it will make sense to pile up for BTC pullback into the low 20s? Okay, so Tarkus is talking big picture. Let's go back to Bitcoin. Well, look, here's the thing. You should have some capital. As you know, we've been trimming out of our Bitcoin. Andrew's been talking a lot about that, taking profits, unloading at these prices, because that's really what you should be distributing risk at these prices, right? Now, as far as big pullback, it's not a good idea to have like a set number in mind, like 20Ks, right? It might pull back, but the thing is, 34K is going to be a significant support. Okay, that's a significant support. So if it finds support there, you may not see the 20s. All right, it's possible. So you have to look at it as, what range of prices would make sense? Well, 34K and lower, right? That would, so if we start pushing if we test 40K, that would be one price. But like I've been telling people in the chat room, a good idea is, you have your money allocated, right? You have your money aside, and when the price starts pushing back, you have to question the support. Is it a minor support or is it a major support, right? 40K is a major support. 45K is a minor support. So what if Bitcoin pulls back to 45K? Is that a good long-term place to buy some? Not exactly. So what do? You put in a smaller amount. So instead of, if your allocations were going to be $100 per allotment, you put in $50 or you put in $25, because that's the magnitude of support you're dealing with. If you go to a major support like 40K, that's where you can weight it a little bit more. So instead of $50, now you throw in $250. Oh, okay, that's much bigger, but you're getting better prices. If that's cleared and you're starting to mess with 34K, okay, hey, you can keep your allotment perhaps at 250, maybe you raise it to 300 or 350, right? But you're accumulating, you're getting weighted at a better average price, and then if it goes even more, you're going to have some amount left, I would imagine, of the capital that you're planning to invest. The thing is, once you reach that objective, so let's say it was a total of, let's just say $5,000, and you reach that objective, and Bitcoin is starting to push the 20s, that's when you have to be careful about putting on more and more and more and more, right? You wait for an extreme situation, perhaps you still have some money aside, you say, okay, here's an extreme situation, Bitcoin's at 25K, I'm going to buy, $500 worth here because it's extreme, but that's it. Because you need to protect yourself in case it does something that is unexpected, right? What would be unexpected? Bitcoin going to 15K. And people laugh, wow, 15K, it'll never go there. Anything is possible, okay? So if it goes there, a lot of people are going to get shaken out of their coins, like we saw when it went from 20K back to 3K. No one expected 3K. A lot of people got shaken out. So in order to not get shaken out, you can't be too big, okay? So that's why you need to plan all this stuff in advance, have your allotments prepared, and as it starts testing certain prices, you know what to do. And once you reach your potential, once you reach the amount, you stop, okay? And then you work with it from there. Once it starts going your way, you start averaging out, okay? I mean, the thing is, averaging in sounds great after the fact, Because you can look back and be like, oh man, imagine if I bought all the way to 3K and then I sold it all at 30K, and right after the fact, it looks great. But then, going forward, you don't know. And there will be a situation where the thing goes a lot further than you thought. And if you keep averaging, you can get wiped out. So you have to have some sort of risk control on that. Okay, so just something to keep in mind. I emphasize that a lot. Okay, so that's my answer to that. All right. So yeah, so Tarkus, I don't think there's a good chance we'll reach the 20s. I think that's a low probability, but like I said, anything is possible. Okay, so I won't be overly surprised either. All right, let me see what else we got here. Getting through the questions. By the way, for those of you that are just joining or new, please press the like button if you like my video, and also register for the channel if you haven't yet, so that you can get email notification every time I do one of these. Okay, let me see what else we got here. Why do I have more price history for APPH, Kev? That's interesting. Back to APPH. I don't know why you have more price history. Maybe it's the exchange I'm using? Let me see. What other choices do I have? Let's see, I have AP, no, that's a warrant. I don't know why you have, what's this one here? Maybe in the German, the Frankfurt exchange there. Maybe that's why. Let's see. Nope, it's even worse. Okay, I'm not sure why you have more price history than I do. Unless maybe you're looking at the warrant. I don't know. It's interesting, but okay. Thanks for bringing that one up. Something was wrong with the app chart. Okay, yeah, I'm not sure what the story is with this chart. All right, Gabriel, where would you put a trailing stop on BTC and ETH? Okay, you were looking at 6%, so you're looking at a percentage. I don't use percentages, although you can. I like to use the candles outright. Okay, it's more absolute, which can be problematic at times, but you know what? There's no perfect way to do this. So what I like to do is I just like to go 2 candles behind. All right, 2 candles behind, and the stop would go below the second candle, because right now we're open here on this candle, right? So I go 1, 2, and then whatever that second candle is, that low. And that will keep you somewhat, that at least will allow you, if the move wants to just persist, a lot of times it'll allow you to stay in longer. Okay, but at some point, you're going to get knocked out, and it may be at a much higher price than you normally would have gotten out, but there will be a time when it peaks, you don't get out, and it taps you out at the lower price. That's the trade-off, and that's something you have to be prepared for. So that's the way I like to do it. I like to do it 2 candles behind. Okay, so thanks for bringing that one up. Again, trailing stops are a tricky thing, and there's no, like I said, there's no way. Everyone wants to get it as close to the top as possible. There's no way to do it. All right, so thanks for bringing that one up. Okay, so ETH, same thing. So ETH, let's take a look at Ethereum. Look at this, new highs, wow. So again, I mean, this is a nice breakout on Ethereum. What's this thing, 1937? So this is probably what's keeping the market going here. When the party runs out on this one, that's probably when, you're going to have to look out. But again, 2 candles behind, right? This is current candles open. So this is 1 candle. This is 2 candles right here. So the stop would go like somewhere around there. Okay, not exactly at the low. You put it lower because, everyone puts it exactly at the low. So you put it slightly lower, and then that's where your stop is. If tomorrow's candle looks like this, right? That would be the open candle. So this would be 1, and you'd still be in the same position, right? The stop wouldn't really move much because this would be your 2 candles behind. And then if the next day the candle looks like this, and that's the open candle, well, you go 2 candles behind and your stop would go here. Okay, does that make sense? So that's how I like to do it, manually. So thanks for bringing that one up. TOT, oil, let's take a look. So I know oil's been strong recently. It's hard to believe that it's been strong, but it's been strong. It is what it is. You can't fight it. And here's the thing. So oil has this nice, this thing, TOT, had this nice push, right? This November push here. And it's been in this nice elongated consolidation since then. This is a potential trend continuation pattern. But the current price, you're near the high part of the range. I don't like this area for any new longs. I also don't like the current candle. So I wouldn't be interested in a long here. Again, I'm talking from the swing trade perspective. I would be interested in the long here near the range low. Maybe not exactly at the range low, but near the range low, which is what, 42.34, around there, 42 and a quarter. And what are you at 44.05? That's not too far away. So that's probably your best reward risk and your best probability if you can get a reversal in that area because you're near that range low. A little bit more ideal would be if it can push just slightly lower and then fake everyone out, right? That would probably be your best bet on something like that. Kind of like the way Neo looks, right? Kind of like this. That's I love these type of breaks out, sucks in all the shorts, and then it fakes them out, right? That's a nice high probability setup. So you're looking for something like that in something like this, if that makes sense. All right, so thank you for bringing that one up. T2, let's take a look, Kev. I believe this is the software, the gaming company or whatever. So yeah, there you go. This looks very similar to that chart that I just showed you with Neo, right? So you have this nice consolidation. Look at the nice trend, right? Very clear, broad bullish trend. You have this consolidation right now. So this is typically a trend continuation pattern, all right? And you're at the low of it. That's what you want to see. Not the middle, not the high. You want to see the low, okay? Andrew likes to take these breakouts. I don't like these breakouts at all. They work sometimes, but not a big fan because I don't like getting caught in this mess. So you're in a great location. Look at yesterday's candle. Yesterday's candle was a pin bar to go long, okay, right here. That's nice. And what's today's high? 196.75. This would be a good swing trade, definitely. A good reward risk because of the location, right? The low there is what? 190. Yeah, so I guess like that the high 180s would be a good place to put the stop, and the high is 196. So you're looking at like 196 and a half. So you're probably looking at about 5 or 6 points of risk, but there's a lot of potential in this thing. I mean, the high of the range is what? 212-ish. That's the high of the range. So you're looking at least, 10 to 15 points of potential profit compared to 5 or 6 points of risk. So that makes sense. And if this thing breaks out and you're in from a great price, hey, that's when you want to let it break out and, you're in from a great price. So if it fails, you're still a strong hand and you can dump it on some people if you want to because you're still taking profits. So I like it. I definitely like it. That might be a good swing trade for tomorrow as well. Okay, along with Neo and the rest of them. All right, let's see what else we got here. Jay, SI has been a great trade for me. Took profits and want to get back in. Silvergate, okay, let's see. SI, ooh, nice move. Silvergate Capital, okay. This is a nice impulse structure, okay, very clear. 1, this is 2 right there, okay. This is 3 over here, and you're getting into your 4, okay. This is 3, you're getting into your 4. So you probably have a potential leg, one more leg higher. You have this pin bar situation right now, but here's the thing with this. I would let it stabilize a little bit more. I've taken a couple of these. Now again, if it takes out that high, it may have that swift leg higher. It's possible. It could do one of these. But for conservative purposes or being more conservative with it, I would wait for like a little double bottom development or some kind of stability to develop. I've taken a couple of these recently, like with FUV and all that, and they just failed. Talk about FUV. F stands for failure. They just completely failed, right? So I would doesn't mean that they all will fail, but we're in this shaking environment with the way the stock market is starting to act. Waiting for a little more stability might make more sense. You have support right around here, 141, right around that area. So it would be ideal to see like a double bottom develop there. I mean, that would be ideal. Again, you may not get that. Maybe you'll get an inside bar or something, and you could work with that. But your risk is going to be defined by that 140 area, okay? And, obviously this thing is, it's strong. Can't argue with that. So a higher high is likely to develop. I don't know what this thing is following. I don't know if this is, I'm guessing it's not highly correlated to the S&P based on maybe it is, I don't know. Anyway, point is, it looks like there could be one more leg in that thing, okay? Do we have any historical price action? No. So you'd have to use projections as far as targets. Okay, so good question on that one. WBA. Okay, let's take a look. WBA. Walgreens Boots Alliance. Okay, so let's look at support and resistance first. You have a support right there. You have a support right here. You have an ugly pin bar over here. And you have like a double top development. Okay, so this could be a consolidation developing, right? This little section right here could be a consolidation developing. Could be a higher low. So it's not bad. I mean, you are looking at something that's generally strong, so that's all good. You have an inside bar that developed today. This thing's going to close in a few minutes. So if you take out the high tomorrow, 49.5, you would have a buy signal. Risk is going to be defined by 47, basically 47.5. That's your absolute range low. Price really, if it's going to hold this range, probably shouldn't go below that level. But here's the thing. You have this range low too. So it's possible for price to fool around in this area, right? So if you take a trade and you get caught up in that and you get stopped out, that's one of those things where you have to be patient, and it may give you a new buy signal in this area. In those situations, it's okay to get back in. The mistake not to make here is don't get distracted by this double top. Yes, it's a double top, and double tops are generally bearish reversals. But the thing is, in order for this thing to be bearish, it needs to start taking out supports. Hasn't done that yet. Okay, not one support has been taken out, right? So this at least, 46.5 and 43.5, they'd have to be taken out if you were going to be more bearish on this. So I like it. Like it as a long. Just have to be careful if it gets tricky in, from the current price into that 46.5 support. Okay, so I'd watch that, and you're going to have to work with that one there. I personally would wait for the 46.5 support. These levels, although it is a setup developing, it's not at the best level. And I tend to be more conservative. So that's how I would handle it. But it doesn't mean it won't work. If you're a more aggressive trader and you're willing to take that risk, that makes sense. Okay? At least you're on the right side of the bigger picture there anyway. All right, so thanks for bringing that one up. Okay, cool. MTLS. Let's take a look. Hey, Komsky, cool. Thanks. Oh, I appreciate that. I've been following on TradingView for years. Wow. I can't believe I've been on there for years. Isn't that crazy? Yeah, so all right, thanks, I appreciate that. Okay, so let's take a look. This is nice. Materialize. All right, nice trend. Higher lows, higher highs. Nice pullback, nice location, potential double bottom. Okay, so you have all those things going for you. Good location. Now you have a pin bar. Okay, so and it's part of a double bottom. So all of that is good for a swing trade. The pin bar high is at 66, basically 66.25. I like to make it work a little bit. Your risk is going to be defined at, what is this low here? 60, so basically 61, so 60.5. So you're looking at about 5 points of risk on something like this. And potential can be measured by the middle of the range, right around this area here. So 75-ish. All right, so you're risking about 5 points to go for maybe 10. That makes sense. Okay, that reward risk makes sense. So I definitely like this one as a potential, trying to catch this potential bounce. I like that idea. Just have to see how it develops tomorrow. Now, compared to some other ones, this is a single pin bar, and some other ones I mentioned, you should probably wait for more structure. The reason why I say that about this on the single pin bar is because you have structure back here. Okay, and it's testing that area again for the third time. So it's got something behind it at least. It's not out here alone by itself. Okay, so I do like that, especially with the S&P trying to make that turn like it's trying to make today. All right, so that's pretty much, I covered everyone's questions just an hour into that. Okay, Andrew. All right, so Andrew, I'll do yours, EVGN, and then we'll wrap this up. Okay, but great questions, everyone. I really appreciate that. And there was, so hold on. So here's some potentials, right? just to kind of review here, MTLS is a potential swing trade long, right? These are, I may call one of these tomorrow. Let me just go back. I think T2 was the other one. Let me see. You know, because a lot of people pull up, yeah, T2. Some people call up some really good trade ideas in these streams. It's like, why didn't I send that one out? That was a good idea. I think those were the two. Let me just go back here. I'm just going back, running through the chat here. No, that was definitely not one. Sorry. It was one of these. No, it wasn't these energy ones either. I don't think so. I don't think it was one of these energy ones. Let me see. No. So the potential ones that I'm looking at are MTLS and T2, right? They're like, those look like good candidates. Yeah, T2. Okay. So just as a quick recap. All right, so EVGN. Let's take a look. EVGN. And by the way, I'm trying to spend more time on answering questions and stuff like that. I want to make these streams, I want to really make them more valuable to you. All right, nice trend. Higher lows, higher highs all over the place. Look at that, beautiful. Now, pull back. Pull back. Yeah, I like it, Kev. Where were you guys on Tuesday for trade of the week? My CGC sucked, but it never triggered though. All right, so here's the thing here. You're pulling back. There's no reason to get in at the moment. Your first support is at 735. I like the prices. I like these cheaper stocks because when they go, they tend to pop up on all the day trader radars, and you know how they go, right? They go nuts for it, and there's a lot of potential, a lot of momentum there. So I like it for that reason. You can do a little bit better with the location, and there's no setup, right? I mean, it's not exactly an ideal pin bar or anything. So on something like this, I would wait. You're at 809, so this thing can pull back another 75 cents or a dollar. That's within reason. This location right here would be more ideal if price can test it, and that's where you want to see the setup, especially if you're going to go for like a single candle. Otherwise, if it's not going to go that low, at least you want to see some kind of stability develop there. Perhaps an inside bar, perhaps followed by another pin bar, something, because you're still facing this bearish momentum. Okay, you're still dealing with that. So I'd want to see some stability develop. But the trend is definitely favorable here, and at least you have potential. Once the thing stabilizes, you have potential to make that next high, which would probably be around that $10 area. So if you're going to risk $1 to make $2 or $3 or something like that, the reward risk makes sense. Okay, but again, wait for a better location and wait for a better setup on that one. The trend is in your favor. Okay, so yeah, Kev, CGC real quick. Look at this mess. But oh man, what's this thing at? $36. This stupid thing was at $50, right? Just a few days ago, and I call this as a swing trade, as trade of the week. But you see, the thing is, I knew what a pain this thing could be, right? And I even mentioned it. If you read the email that I sent out for trade of the week, I said this thing could give us a double bottom, and I made sure I put the buy price far enough out, right? Look at the buy price, 43.50. Okay, and this was the candle that should have activated, and it never went there, right? High was 41.66. So, in fact, what was it, this candle? No, I think, yeah, it was the top of the second candle, 43.40, right? And I put it at 43.50. So, which means this red candle, in order to get us into this trade, this red candle should have done this. And it didn't do it. So, we managed to avoid this mess. Now, is CGC a bad trade idea? Well, no, the broader trend is still bullish, and yeah, these potheads will jump back into it. You know how they are. So it's just a matter of waiting for the setup. If it can set up in this location, hey, great. But I'd leave this thing alone right now. But again, that's a good example of why you need to respect the buy stop and the stop loss orders. I talk about that a lot, and I specifically mentioned that in the email that I sent out for Trade of the Week. If you're a free member, you should have gotten it. If you didn't get it, check your spam folder. But 43.50, if we had just instead, now think about this for a moment, and then I'm going to wrap this up. If I had just said, hey, let's just CGC's trade of the week because I feel like it's a good thing. Let's all just buy it. I'm buying it on a hunch, or I'm buying it because I'm buying it, right? That would have been a bad idea, and it would have gotten stopped out for sure, right? This thing closed at, mid 36s. So we were able to avoid that stop because the market had to get us in, not us. So this is a very specific technique that we use for our swing trades, and it doesn't always work. It's not perfect. Sometimes you're going to get tapped in, like FUV got tapped in and it stopped out. That's going to happen. But more often than not, it's going to help you avoid these bad trades. This is a stop that clearly you didn't have to take, and it's that defensive nature of the strategy that really helps to make it consistent over time. Okay, people don't realize saving money is actually how you make money. Not having to take a stop. This would have been an unnecessary stop, complete waste, if we had just jumped into something like this. Okay, so another nice learning example there. I'm still all for CGC. Okay, I'm still all for it, but it's got to do better than that. Okay, if I see the setup, I'll do something. I'll do something with that. If I see the if it stabilizes and I see a long setup, I'll call another swing trade in it. Sure. I don't know if it'll be trade of the week though, but we'll see. Anyway, all right, everyone. So I'm going to wrap this up. I want to thank you all for the great questions. And again, so we got two potential trades out of this stream, T2 and MTLS. Now, if I choose one of these and send it out tomorrow, well, our members obviously will get the text and the email for that with all the specific numbers. But if you're not a member, hey, at least you have an idea, and you're going to have to put your own trade plan together there. All right, obviously this is all for educational purposes only. So thank you all again for your participation and your support. And I'm going to leave it at that. All right, so enjoy the rest of your day, everyone, and I will see you in the chat room tomorrow. All right, have a great day, and thanks for watching.